What is up, you guys? Welcome to session number 50. I want to thank you guys so much for watching all the way up to 50 sessions. I see in the analytics that we are seeing consistent data with people watching these sessions, and I want to thank you guys so much for watching. So now we're diving into today, and we have S&P finally rising above 5,000, gains for a fifth week on encouraging inflation news. You can see right here on the chart we have broke past 5,000 to the 5,021 range there, with the high of 5,021.81. So there's great news for the S&P 500, really breaking it on earnings season, on inflation data that's coming out. So let's dive into some of the news here for today, and let's go back into the portfolio and see how the stocks are reacting to today's news. So we have stocks rising on Friday after December revised inflation reading came in lower than reported, and the S&P broke above the historic 5,000 level as strong earnings and economic news chugged on. We have the Dow Jones Industrial Average slipping 80 points or 0.2%. We have the S&P rising 0.4, breaking that 5,000, and then we have NASDAQ adding 1.1% for the week. We have S&P is up 1.2%, while NASDAQ composite gained 2.2%. The Dow is flat week to date. A solid earnings season, easing inflation data, and resilient economy have charged 2024's market rally, setting the S&P 500 up for a fifth consecutive week of gains. It was also propelled by S&P getting to that 5,000 level after touching the milestone during Thursday's session, with the S&P 500 in 2021 of April crossing that 4,000 mark, and now this week we have the S&P 500 crossing that 5,000 milestone. And it comes with a big mega cap technology stocks gaining again on Friday, contributing to S&P's march above that 5,000. Nvidia and Alphabet adding more than 1% each. We had Cloud Flare skyrocketing 23% on strong earnings, boosting the broader cloud sector in tandem. So that is really boosting the S&P 500. We have a fun fact here that CNBC is giving us: 332 S&P companies have reported quarterly earnings so far, with about 81% of them reporting above analyst expectations, according to LSEG. And that compares to a 67% beat rate in typical quarters since 1994. And that is according to CNBC live updates here. I will leave this in the description below, a little market update for you guys. Let's now dive into the portfolio. So we're looking at SPX here. We broke 5,000 in a Thursday session, and we're breaking above the 5,000 at the 521 mark here today on SPX. Let's go into the Spider ETF and see how that is doing. So you can see here, really at the 500 mark here. Made a high at 501.08 there today, and we are trying to make higher highs there, trying to make a new all-time high for the Spider ETF there. And this is the 6-month chart. We're really seeing a healthy graph there since November 1st there was let's see what the bottom was. Like late October, I would say the bottom is here at the 407.56, and it really started to pop here to that 501, trying to make a $100 run here, hopefully getting to that 507 range and making that $100 mark there since October, late October. We look at QQQ, and we have QQQ trading at 437.20. 437.22 is the high there on the 6-month chart, and we are seeing the market really driving from earnings. We have it driving from inflation data that coming out lower than expected, and the only thing that's kind of iffy right now is the Federal Reserve, and they're really coming out and holding their ground on saying that they're not going to cut rates in March. It's highly unlikely, and they have not said anything to my knowledge about the May meeting, if they're going to have if they were going to cut rates then, have any idea of cutting rates then. But you never know, they can surprise us. Inflation data, is coming out, and it could surprise, the Federal Reserve, and they can, surprisingly cut rates in March. We will see what happens in March. So that is how the market is reacting with SP 500, the Spider ETF, and QQQ following the NASDAQ 100. Now let's dive into portfolio positions here. Let's unlock our trading, and we have QQQ position. We have it at, I believe, looks like 412.41, market value at 4,800 here. We are going to pause our position until we start to see, this RSI level in oversold values or below fair value range. And, we don't want to buy at the high here. We wanted, to buy at these dips here, these lows. And, we did buy around the 420 or low 420s. We bought, I believe 2 or 3 shares. You could check in the past trading sessions, but we are at 11 shares right now, and we do want to continue building this position up. We like QQQ because, it's tech heavy. We believe in tech for the long term. This is, going to be hopefully a trading position in the future, trading and selling options and maybe trimming here and there. But we really want to build this up to be the income generator for Mogul portfolio, and then branch off and put the profits into the other 30 stocks and build these stocks up to be able to sell options on them as well. So QQQ is, we're trying to build it up to be a main income source for Mogul portfolio, and by selling options for premium and to collect that premium and to build this portfolio. So that is the update on QQQ. Palantir, we have Palantir, expiring today. Today's February 9th. And, we see it trading at 24.55. So we did lose potential gains on this position. We are going to get assigned today. And, we have to get assigned at 18.50, as we mentioned on previous sessions. And, it's all part of the game. You can't, kick yourself. You just got to move on and, move on to the next profit. So we're going to turn around on Monday. We're going to be getting our capital back at the almost $2,000 mark. Turn around, hopefully maybe do another, maybe do a cash secure put on Palantir, or maybe buy in again, see where it's at. Maybe it's going to dip down by Monday, and we'll buy in again and then do another cover call. So, we're going to see what we're going to do on Monday when we come back and get this capital. And, we're going to, Palantir is trading high here at, 20, I believe it was 24.52, 51 range. So that is really high for us. Let's go look at the graph here. And we still seeing it trading, on the 6-month chart at 73. So that's high for us. We kind of wanted to see it come back down to in between, 17 and 20 range before we start to think about buying it back. So that is, we might do a cash secure put on Palantir, maybe try and get it, at, 17, see what the premiums are for that. 18, 19, we will see what happens. And then we might do 2 contracts. We might do 2 contracts, 2 cash secure puts, maybe one at 19, one at 17, see how premiums go. So that is the Palantir update, and we're probably not going to buy in 100 shares and then do a cover call. I think we're really trying to lock in on that cash secure put, but we will see on Monday what the opportunities look like. So that is update on Palantir position. We are getting assigned today, and we're going to have to sell our shares at 18.50. All right, so now we are going to be diving into the $10 buy of the day. So we have the stocks that are down on the day, not in the portfolio, but on the day, is Uber at 2.18%. We have Disney down 2%. We have ExxonMobil down 1.89%. We have Block 1.71%. Airbnb almost 2%. We have Coca-Cola 1%. So we typically like to focus on these companies, the bottom 5 of the day. So in the portfolio, we have 4 stocks that are currently negative ROI right now. We're going to be holding those positions until they, see a positive ROI. But these are deals that are trading below our average price. So we want to try and buy deals all the time. So we have Johnson & Johnson trading at the 42 on the 6-month, the main chart we use for technical analysis. We like long term. And then we have Lockheed Martin. We have it at the 48 RSI. We have Zoom trading at 69. That's popping a little bit. We did buy that earlier this week. Same with Lockheed Martin. And then we have PayPal at 41. So not a lot of deals that present themselves, the stocks that are have a negative ROI in the portfolio. So I think what we might do is really try and build this Uber position back up. And we see it at fair value at 51. And we have, I believe, Uber, we did trim it earlier this week. And, we have a market value of $13. So we're going to try and buy Uber while it's down 2.16%. So, we want to take advantage of deals and build this Uber position back up. So let's go ahead and lock in a $10 buy of Uber for the last buy of the week. Let's go ahead and do that. So we have a amount, $10. We have order quantity 0.14269. Let's go ahead and lock that in. All right, so we bought Uber. We got filled at $70.07. So that is the $10 buy of the day. And we are, not planning on trimming today unless we see a really good opportunity here. So let's go actually open P&L here. Let's go to Nvidia, Meta. They're not eligible. We need 1 share at least. So DraftKings, we have still trading at the 71 RSI level here. And I think we're going to hold just because we already trimmed DraftKings this week. I believe we trimmed it on Monday. So we're going to hold off, and maybe we're going to trim it on this Monday coming up and see where it's at, because this could, continue to rise. We hit a high at the 44. We have average price 17. So that will be around a $27 appreciation, a $27 profit. And let's see if we could get in the 30s, guys. So the 30 appreciation mark, and maybe this will pop up to 50. Who knows? So we're going to hold off on the DraftKings trim. All of these stocks are not eligible yet. We do have over 1 share in Apple, and we have it at 54. Not enough for us to trim. MGM 54. So a lot of these stocks, Airbnb on the 6-month, and we have at the 54 as well. So not enough really profit for us to really trim the ones that have at least 1 share. That's our rule. We trim the ones that have at least 1 share. And obviously, as the portfolio grows, we're going to be raising that maybe 5 shares, maybe 10 shares minimum for us to be able to trim. So that is pretty much trading session number 50, guys. I want to thank you guys so much for following us for 50 trading sessions. I would pop a champagne glass right now and pour some champagne, but I actually quit drinking for 3 months, and I started that in January, beginning January. So I want to thank you guys so much, though, for watching these sessions. It means a lot. We want to grow. We want to grow the club on Discord. We want to make a presence here on YouTube, make a presence on Instagram, and a presence on TikTok. So if you guys like this content, please consider subscribing. Smash that like button for the YouTube algorithm. If you guys aren't part of the club yet and you guys really want to be a part of a supportive club that focuses on finance, health, and making personal connections in both those pillars, health and wealth, then go over to mogulfellows.com, go to membership, read up on it, see if you would like to join our community over on Discord. It's free for right now until I start really charging for it. I believe we want to really build up the Discord more before we start charging, and I want to put courses in there. I want to put tools in there. I want to put my own research in there. I want to put a bunch of different stuff, guys, that you can learn from in the Discord. If you guys are not aware of the terminology and stuff I use on these sessions, then go learn over there and then come back here and you'll understand what I'm talking about. And I'm going to be really diving deep on education in the Discord. I also post my trade alerts on stocks. I do we do sports gambling in there. We do a bunch of different stuff you get access to. So go over to mogulfellows.com, check the membership, see what's included in the membership. We add stuff every day over there, and so go over to the website, check it out, see if it's for you, get the invite, get in there, get your spot while it is free. So that is trading session number 50. Thank you guys so much for watching. Hit the outro.